Well, welcome everyone to another episode of Real Estate Mogul MD. My name is Bob Bosick. I'm a retired C-suite executive, and I have the privilege of speaking with high-income earners and investors. We're here today to share real-world journeys along with the to-dos and, more importantly, the not-to-dos. I'm fortunate today to have with me Thomas Geib. Thomas is this newer generation of investors and entrepreneurs that far exceed people like myself when I was a similar age. And I'm excited to hear about his journey. If those of you aren't aware, he has burst onto the scene recently in real estate and investment. He's a co-founder of Physician Wealth Systems, and it's really a privilege for us today to have Thomas here. Welcome, Thomas.
Thank you. Thank you, Bob. I really appreciate that introduction.
You're very welcome. It is truly exciting. I get to hear how people like yourself are coming onto the scene and figuring out how not to make all the mistakes that I made and others that are a little longer in the tooth have made over the years. You and your generation are doing a remarkable job. And I'd like to just hear a little bit about your current journey, how you got here today, and maybe any challenges or pleasant surprises you've experienced.
Yeah, no, absolutely. Really, it all started about two and a half years ago when I met a man named Brett Riggins. I was actually working at the time at a store, and he came in and was buying a TV, and I knew that I wanted to get into real estate at that time. I didn't know anything about it. And Brett, who came in, was shopping for a TV for one of his properties, and that piqued my interest. I got his business card, followed up with him, and eventually got a meeting with him. And that was my fortunate day when I was able to ask him a ton of questions. I learned a bunch. I learned mostly that I didn't know anything about real estate at the time. And at the end of that discussion, that meeting that we had, I proposed an offer to him to work with him for free if he would teach me everything he knows about real estate. And of course he agreed. And throughout the years, he's been teaching me, and I'm still learning from him because there's just so much to learn in real estate. That's
impressive. I don't think that I've ever taken that approach. I've heard of others doing that, and I respect it. And really am impressed that that's how you jumped into it. What was it that specifically, not knowing anything really, not having owned any real estate at that point in time, and not in the real estate business, what was it that was, you were romanticizing, if you will, about real estate? What was your belief systems that you had at that time?
Yeah, well, I just heard through, I don't know where it came from. Maybe it was books I read or channels that I watched, but that real estate was the best way to build wealth. If you wanted passive income, real estate was the way to go. So I just had that in my brain at the time, and I knew that I needed to learn about real estate. And I also knew that the fastest way to learn is to find a mentor. So those two things, I set the goal to find a real estate mentor, and Brett showed up. And full disclosure as well, I didn't come up with that idea of proposing to work for free. That actually came from someone named Ty Lopez, another very successful entrepreneur. But I used it and it worked. So,
are you a voracious? That's an impressive story. I know, having been a young 20-something person and raised three young 20-something persons, I can assure you that you are the exception, which is why you're exceptional and why you're the co-owner of Physician Wealth Systems at such a early stage of your career, and it's just highly impressive. You're a voracious reader, I suppose.
Oh yeah, absolutely. I actually wasn't always a reader myself. In high school, I maybe read one book, yeah. But yes, now I am, definitely.
Now that sounds like a young person. Read one book. Now we have alignment on some of our experiences at that age. So tell me, as you have engaged yourself in developing this business, which is really starting to make a splash, and it's really providing a unique service to busy professionals who are not high, income earners. You have a bunch of integrated services that you provide, but and we can talk a little bit more about that in a few minutes. But what were some of the learnings that you've had breaking into real estate and investing in real estate that you weren't aware of? There's some challenges that maybe or hurdles you had to overcome.
Sure. I think the biggest thing is your network is the most important thing. Your network is your net worth. And it's all about developing those relationships, those partnerships with people in the market that you want to invest in, from lenders, real estate investors, wholesalers, property managers, realtors, everything. So I would say definitely the first and most important is those relationships and developing those.
I can't agree more. It took me, probably 30 years to be able to succinctly say what you've already said, which is at the end of the day, it is all about relationships in real estate investment. You get into a market, and generally speaking, through my experiences, it's a trial and error experience, where what I literally mean is when you go into a new market, it's just you're hoping and fingers crossed as you reach out and start to engage people to provide services to you, whether or not it's construction management or acquisition or property management or a good lender or any of those types of folks. We don't get to hit 1,000% out of the gate. That usually comes with trial and error and finding someone that is wed to your thought processes, your sense of urgency, the way you like things to get done, the way that you like to be communicated to, and the frequency. All of those variables really come into account. And the more you can get alignment with those folks, and over time, the more successful you have, the greater efficiencies that you experience. And when you look back at all of the hurdles that one has to go through in order to get there, you just really think about the lost opportunity, the missed chances to get through a particular project, or an opportunity to purchase something or to sell something. Usually it's all wed to those relationships. So I think that's a great insight, and something that I agree with 1,000%.
Yeah.
Go ahead.
And if you do know, if you are a busy professional, rather, knowing people is something that you need to do. If you try to jump into it yourself, it's going to be very, very difficult. Those relationships are going to expedite your rate of being successful in your timeline.
Yeah, absolutely. And what would you estimate, in your system, if I was just Joe Blow going out into a particular market, knowing that I had this deployable income that I wanted to utilize for passive income purposes. And I decide, you know what, I'm going to go into market ABC and I'm going to start buying properties. What amount of dedicated time would one need to spend in that circumstance, do you believe, on a daily, weekly, or monthly basis? And I'm going to give you a little more detail. So we're going to work under the pretext for this discussion that we're going to buy one property a month for 12 consecutive months. And
Sure.
We're going to buy it, we're going to rehab it, we're going to refinance it, and we're going to lease it. And if we're going to do that one a month for 12 consecutive months, what do you think is the dedicated amount of time that's required to accomplish that?
Well, if you're Joe Blow and you're just getting into the market, the first probably 3 to 6 months are going to be the most heavily invested in time, because that's when you're going to be spending the most finding those relationships that you're going to need. As far as an actual number tied to it, I would say it would be close to having a full-time job if you want to do everything successfully. You could probably get away with anywhere from 20 to 30 hours a week. But it could be more. It could be 50 or 60. And you're probably also going to kiss a lot of frogs. not knowing who's in the market, not having the experience. So it is going to be very painful initially, but as time progresses, you should be able to bring that down. But it's still going to be a huge time investment throughout those.
I agree with you again, 1,000%. It is an unbelievable investment of time. Again, and then when you put in another variable, which is if there's any permit work that needs to be done, and making sure things are on time, and sequencing things, and being at your site to see that people are showing up as they're supposed to, and it's not something that they're going to show up tomorrow, or weather-related issues. There's just so much that's involved in it, and I don't think people fully appreciate it. I know that I didn't when I really started to immerse myself. I thought that, as I retired as a C level executive, I'm going to get something that's going to give me 15, 20 hours a week. I can do 3 hours a day, half a day's worth of work. And it just snowballs, right? I mean, it just, suddenly something goes wrong and you're running across town. You don't want the workers to leave. You're running to go get materials for them so they can keep everything going along. Permits, learning how to develop the relationships for permits and all of that's involved. It's just, it is involved. So you would say anywhere from 20, if you were really lucky and or not worried about being efficient, the 20 hours a week. And if you were really wed to having a well-oiled machine and trying to muscle through developing relationships, it's going to be 40 plus hours a week.
Oh, yeah. Yeah. And when you get your first property, and then you move on to the second month and you got that first property, but now you have a second property. And then the third month you have 3 properties. That's when the time commitment is definitely going to increase as well, because you got multiple moving pieces, like you said, with contractors, the lenders, the tenants. I mean, there's a lot of things that are involved.
Yeah, you read my mind, because I would think that some of the listeners would think, well, it's just one property. How could it be that much time? But yes, you're correct. There's a compounding effect. I purchased the first property. I'm now just starting to prepare to refinance it, and I'm going to do the repairs to the property. And that's since we're in January, I decided to do that on January 20th. Now I'm into February, and in February 13th, I've got my second property. The first one isn't done. I'm now into the second one. And when that opportunity presents itself, it might be a week later, I'm into a third property. And I've got a lot of things I'm starting to juggle. So, even just doing one a month, which seems really manageable, and a way to attack that, that elephant, which is through bite sizes. It is a lot to do. And so those are terrific insights. What were some of the pleasant surprises that you've experienced breaking into maybe a circumstance that you kind of fell into your lap, or is there any stories that are just, instead of the ones that are a struggle, were there any ones that you're just really grateful fell into your lap?
Well, I will. A couple of things pop into my mind. The first is what I didn't know about real estate. I did know that real estate was the way to go, but I didn't really know exactly why. And as I started to learn more and more about real estate, I started to learn about the tax benefits that real estate provides for investors, which is massive, especially for high income earners who have high tax liabilities. So that was a pleasant surprise to learn more about the benefits that I had no idea. I was just looking at the cash flow, the passive income, but there's much more to that. So that, and as well as my first investing experience was actually pretty smooth for the most part, compared to some others that I've heard first experiences. Working with Brett, he has a nationwide acquisition company, and he helped me with the first property. He found it, got it in contract, and assigned that contract to me. And he taught me everything that I needed to know. He didn't give me any resources in that sort of way, but he showed me the framework to do it. And because of that, it made the process much smoother for myself, as well as getting access to private money, which typically if you're not connected, is going to be very difficult. You need to build those relationships and trust to have someone lend you money.
That's terrific. Who is someone? Let me jump around here for a second. As it relates to investing and you becoming exposed, who is someone that listeners may not know but they should know?
It's a great question. I think the first person that I started learning real estate from and is very popular is Robert Kiyosaki, the author of Rich Dad Poor Dad. He's a real estate investor. He has multiple books out. If you don't already know him, definitely get a copy of his book. It's one of the best books, I think, on financial independence. And it doesn't go too deep on real estate, but it does teach some principles that are fundamental in building the foundation.
Which of one or two of those principles do you think stands out and resonates now with a lot of experience that you're having now?
Yeah. His philosophy is acquire assets and avoid liabilities. And he teaches in his book what an asset and a liability is, which is an asset produces income without requiring you to work, whereas a liability takes money out of your pocket. So in short, asset puts money in your pocket, liability takes it out. And he puts it really simply and just says, avoid liabilities and acquire assets. And that's something they don't teach you in school. I don't think they even teach you what an asset or a liability is. So I think that's one of the most foundational knowledge that you need to know before starting.
Yeah, I think I learned that concept years ago, also in 30 years ago, and that was at the time it was really about. I was listening to Warren Buffett, and his attitude was, and he was talking about cars in this liability and asset discussion. And he was using a car as an example, and his attitude is when you're talking about transportation. And getting from point A to point B, you do it in the cheapest methodology possible. So it's pretty well known that he still drives, and I'm making this up, but it's 2023, and there's probably a great likelihood that he's still driving a 1998, something or another to get from point A to point B. And doing it in the most cost-effective way. But he's wed to that same theory that you are sharing that stood out and resonated to you, and that makes perfect sense to me.
Yeah. Another thing that Robert shared in that book is that the rich don't work for money; they have their money work for them. Yes. And really, and what that means is you're putting your money somewhere where it's going to produce you more money, like an asset.
Yeah, absolutely. And it is amazing when I talk with high income earners that are wed to a specific profession, meaning they're not a business executive, but they may be a physician, they may be a specialized professional as an engineer, as a physician, as a doctor, that they're highly successful in their given area, but that doesn't necessarily translate to understanding and or having the time to invest properly and to understand the opportunities that are available. And especially, I think they don't. I know that intellectually, because they're all bright, they understand the concept, but the tax implications that can benefit one when they own a portfolio of real estate, that real estate affords a unique opportunity for one to dig into and take advantage of. Do you have any thoughts on that you'd like to share?
Well, I'll make a comment. I think that a lot of people, like you mentioned, know that they should be investing their money in a place where it's producing passive income so they don't have to continue to work to earn money. I just think the problem is, which is why we founded the company Physician Wealth Systems, is that they just don't have the time or the know-how or the energy to invest into going that route. Like we discussed, the 40, 50 hours a week to acquire properties. So I think everybody knows what they should be doing. It's just the difficulty of doing that, which is why we've created the solution for busy professionals who have high income to do that for them with the done for you service.
Yeah, I think that's really the secret sauce, isn't it? That those integrated services from tax professionals that we have available to assist people that come on board with you folks, or the built-in integrated services, as I've previously spoke of, for property management, for construction management, for acquisition, for identifying the opportunities. That is really through the relationships which we opened with, is what distinguishes you all and separates you from other folks. That there's a high level of service and focus that's provided to folks, so that they're delighted. As I often say, I use the word delighted, that the customers are delighted, and that things are going well for them, and we're fulfilling the promise. And I think those are terrific things you're doing. A lot of people don't know also that you're able to do this while traveling the world. I think today I speak to you in Medellin, Colombia.
Yep.
In the last few months, I've spoke to you in Croatia and London and in Turkey, Vancouver, all over the country, all over the world, actually. Is it difficult for you to run your business while having all of that going on?
No, not at all. I've really found a process where I can focus and travel at the same time. And one thing that's helped me do that is finding these co-working spaces where I'm at right now and renting out a private office. So I don't have to work from my hotel room or my Airbnb or wherever I'm staying. And it really helps me get in that work mode. So I'm only working when I'm working. And then when I'm playing, I'm playing. So I don't mix the two. And I try my best to stay focused on what's actually in front of me at the time. So for me, no. But at first, it was finding what worked best, which the co-working space is definitely a must for me.
And you're able to find that good work-life balance that everybody's seeking. And when the day's done, you're able to take advantage of these exotic places that you're visiting and be able to get around and see what's happening.
Yeah. Oh, yeah, absolutely. I mean, there's so much. Sometimes I do work a little too much, I think. But being a co-founder of a new startup, I think that's required. But for the most part, yeah, if I want to do something, if I want to see something, I can make the time and go do it and see it.
So being the overachiever you are and making me feel lazy, not only have you become the co-founder of a successful business, you've also recently wrote a book. Is there some things you can tell us about the book that would be helpful for the listeners?
Yeah, the book is How to Get Rich as a Doctor. But really the philosophy and the framework of it applies to anyone who has high income. And what Brett and I, other co-founder Brett Riggins, both of us wrote the book together. And what we wrote out, in that book is our process of going from 1 to 12 properties within 1 year. And it comes down to a few things. And the first thing, just briefly touching on some of these points, is your mindset. And your mindset's the most important thing. And if you don't have the right mindset, you don't have that long-term thinking, it's going to be very difficult to move forward. So beyond the mindset, we go into the actual strategies, what markets to invest in, what to look for in properties, how to look for properties, how to connect those relationships, all those things, much too much to discuss on this podcast. But it is available on Amazon. You can pick it up, as well as if you're interested in a Kindle edition or ebook edition, you can reach out to us at physicianwealthsystems.com and we can send you a free copy.
Well, terrific. I think, in the with time considerations, I've got one more question that I would like to ask you, which is, what does the ideal client look like for you at Physician Wealth Systems? Is there specific attributes or qualities, or do you take anybody? What are the qualities that you're looking for in an ideal client?
So it's a very limited capacity on how many clients that we take on. Currently this year, being 2023, we're only taking on 10 clients, of which we've already fulfilled 2. So first of all, we are only looking for those that we want to work with. So the relationship has to be there. We are fortunate to have the opportunity to decide on who we want to work with. But beyond that, we're looking for individuals who want to create that passive income. Maybe they just exited a company, or they have very high taxes and they want to lower their tax liability. You do have to have a minimum of about $500,000 or more of cash, liquid cash, or access to that capital. And if you meet those criteria and you're someone who is willing to take action and wants to build that passive income, then it potentially could be a good fit.
And do you find one of the biggest hurdles for these individuals that are coming on board is their ability to take action? Is it difficult for them to make a decision, or is it just difficult to get a hold of them when an opportunity presents itself? And is that what you mean by people that are action oriented, that they do respond soon?
Yes. Yeah. So we do our best to try to screen that out. If it's someone who's indecisive or someone who isn't all in, then it's probably not going to be a good fit. But if we are working with someone and they're unable to make decisions quickly, they will miss out on opportunities, because these properties, these assets that we are acquiring are off market, and we do need to move quickly on them. So if you're someone who can make decisions quickly, and we go through the process, we explain everything out, we make sure the investments are above and beyond of what we're actually promising. So there's nothing that we're shorting on that end. It's just making that decision and making that action, which typically we actually haven't had any issues with so far.
Do you say no to potential clients for any particular reason? They get a hold of you and they have interest. I've got $500,000. It's deployable and I'm ready to rock and roll. But for whatever reason, you don't think it's a fit for you?
Yes, we will. We will do that. For example, if we have too much interest at a certain amount of time and our volume for fulfillment, because like you said, we always want to delight our customers and our clients. So if we have too much interest, we're only going to take on a limited amount of people at one time. And again, coming back to the relationship, if it's not a good fit, if our communication it just isn't there, then we will say no, and we may suggest alternatives.
So it's really, although there's a demand that is being driven in a service that you are providing, it's safe to say this isn't a volume-based business for you. You're not going to take on as many clients that are interested over the course of the year. You're really limiting the amount of people that you're bringing on board so that you can fulfill the promise and delight the customer. Yes. And I like to use the language, and I enjoy these types of businesses that fall into this bucket that I'm going to describe. But it's a boutique business providing almost a concierge service. It's a white glove service, and it's intended to minimize the amount of impact it has on a physician in this case, or any busy professional, so that they can create that passive income while we do all the heavy lifting in terms of time.
Yes, exactly right. And we're also looking for, really, it's a community. So we're looking for the people who can fit in this community, because we're all doing this together and we want everyone to get along and make sure all our intentions are in line. So we're focused on that community aspect as well.
I think that is a terrific way to say it, and that is correct. And I would add one other thing as we get ready to go here, that these are generally nice people that you want to go have dinner with, or anybody would enjoy going to dinner with, that they're not ego-driven necessarily, but they're kind, they're nice. And the other attribute that really stands out to me, and it's important to have this when they come into the community is that they're wickedly smart, intelligent people, and the value add of having a community of people that are really smart is a value add for everyone.
That's right.
Yeah. Okay. Well, listen, I always appreciate the opportunity to speak with you. It's always fun. You are a tremendous person that's been added to my community that I enjoy greatly. You have terrific energy. You're bold and courageous, as are a lot of people of your generation now. So more so than my generation. I call myself I'm more from the risk adverse generation, where, we didn't necessarily take I'm not sweeping it across the entire generation, but we didn't take the chances often as much as I see people of your generation doing. And it's just the energy that you provide to me, and the insights that you have are terrific. I think that it's been a terrific time talking with you today. And I look forward to having more of these conversations and picking your brain and you sharing what your experiences are as you continue on this journey with Physician Wealth Systems. So it's a pleasure having you here today. And I wanted to say thank you again, and we'll talk soon.
Thanks. Yeah, it's been a pleasure, Bob.
All righty. Bye-bye.
Bye.